You can pay interest only because, I mean, or you can choose to amortize it. Amortize it meaning paying the interest and the principal. But remember, it's not money that you borrowed that you need to pay back. When we do these structures, for asset protection, you have a property, it has equity. Let's say you have $1 million property, it has 300,000 equity. We set up a Wyoming LLC, and when you set up an LLC, you need to fund it. You need to capitalize, you need to put some money in it. You can put money, or you can legally put, I owe you some money. I owe you 300,000. And when you put that, you owe to the Wyoming LLC $300,000, you can actually record that lien, that promissory note, you can record it as a lien against the property. Hence, you strip the equity. So your $1 million property that had $700,000 loan to the bank and 300,000 equity now has a second lien on that property that is 300,000 to the benefit of the Wyoming LLC. And you're gonna pay interest on that 300,000. You're gonna pay an interest from you to your own Wyoming LLC. And the Wyoming LLC, it's a virtual bank account. You literally send like an ACH payment of, let's say, $5,000, and then it sits in that bank account, but it's yours. It's a flow-through entity. So it comes back to you. They can literally pay the $5,000, then make the property tax payments or whatever. So it flows through back to you. But what it shows is that the property is encumbered with a $700,000 loan or lien to the bank and 300 to a Wyoming LLC. But that Wyoming LLC loan is not a loan, it is a lien to capitalize the entity. So remember, it's not money you borrowed, it is money you owe to the LLC to capitalize it, meaning to fund it. So instead of putting capital in cash, you're putting it in a promissory note. I promise to put that money later. So the mortgage itself, that note is not a real regular mortgage, it's a note of an IOU that you can make interest only payment, and we structure the promissory note to make one payment every 12 months. So it's 4% interest, you make one payment only, and the 11 other payments accrue to make the note payment higher, like you're capitalizing the entity for more money. So one payment a year, and I suggest you make it interest only to the Wyoming LLC. And I'm sure you're gonna ask me, what if I'm selling the property later and there is that lien? When you sell the property later, you tell the title company, yes, there is a second lien to a Wyoming LLC, but that's my LLC. You show them the email that we send you with the attachment of the Wyoming LLC certificate of ownership, and you tell them, look, I own this. I'm actually removing that lien that was to capitalize an entity. There is no tax impact. There is zero impact whatsoever. The title company will send you the paperwork. What's the payoff? The payoff is zero. You sign it, notarize it, send it back to them, and they remove that lien. Why is there no tax impact? Because you didn't receive money that you're not paying back. You were just gonna put money into the Wyoming LLC that you refused to put it now, so it's just removed. It's an ingenious structure that makes anybody trying to go after you not get a penny. And if they go after you and sue you and win, they get nothing, because there is nothing to go after. There is a lien to a bank and a lien to a Wyoming LLC. There is nothing left. So even if the judge forces you to sell, all the creditors have to get paid first. And any person choosing an attorney to sue you, the attorney is going to tell them there is nothing to go after. Let's settle with the insurance on the building. It is the best asset protection in the country. Look at it on kmagb.com. There is a video that explains it. I mean, I've been doing it for years. We have hundreds of students set up, and not one person was sued or had an issue.